What's going on, guys? Today we're going to talk about SPY and why I like it for S&P 500 exposure over its very popular equivalent VOO. So if you don't know what SPY is, it is a ETF ran and managed by Spider, and they target the S&P 500 index, which is the 500 largest companies in the United States. Okay, with that being said, why do I like investing into SPY over VOO? And looking at, I'm going to look at a couple data points here and kind of explain my reasoning for this. So the first thing you're going to look at is volume, right? So remember this, 41, almost 42 million volume just today. So there is a tremendous amount of volume with this ETF versus VOO, you're looking at 4 million. So more than 10x the volume. Coming back to SPY. A con of SPY is this 0.0945% expense ratio versus VOO, which is 0.03. So SPY is more than three times as expensive as VOO is, in the sense of the expense ratio. However, let's just quickly calculate how much of a difference that is. If we purchased 100 shares, or if you had roughly $55,000 invested into SPY. So what is this going to cost us? So 55465. So the first thing you're going to do is calculate the expense ratio. So 0.0945, and we're going to divide this by 100. And then we are going to multiply that by roughly the cost of 100 shares of SPY. So this is going to be our annual fee and expense ratio. It's an estimate, right? So it's probably going to vary a little bit. I don't want to for sure say this is exact numbers or anything like that. So definitely go do your own research. But based on my calculation, we're going to be paying around $52 a year in expense ratios for investing into SPY. Now, you're not going to directly see this expense, but it is going to be factored into, the share price of SPY. Now, let's back up a little bit here. So, $52 is going to be the cost of SPY versus VOO, 0.03 divided by 100 times 55,465. You're only going to pay, $16.63 per year in, expenses based upon that expense ratio. So, just looking at that, it is much cheaper, right? And, before I go into this, the next piece of the pro of SPY, I like VOO as well. I'm not going to completely say I'm not investing in it, but my first goal is to get to 100 shares of SPY and then, kind of have a mixture of the both, SPY and VOO, because this next topic is going to be options, and the ability of options on SPY versus VOO is very significant. So just looking at the options chart here, options chain, we're going to pull up SPY. So the one thing you can quickly see is that they have expirations Monday, Wednesday, Friday. So they have at least 3 expirations a week. If not, they may have actually implemented, I think it's actually 5 days a week now. So Monday, Tuesday, Wednesday, Thursday, Friday, there's an expiration for SPY. Versus VOO, they are a monthly trading ETF. Take that back. They now are weekly. They used to be monthly. But the problem with VOO is the volume is just not even close to, to the same as SPY. So 509, so the closest strike there is probably 510. Yeah, you're looking at 139, 155 versus SPY. So the closest strike is 555. Yeah, so you're looking at I mean, 500,000, 18,000, 12,000, 373,000. And those are expiring today. So, but, the farther you go out, there's, needless to say, the volume for options is significantly more. Now, it does look like VOO has recently changed. It used to be a monthly trading ETF where you could only trade it once a month. But it does look like they have just recently changed that, where you can trade weekly covered calls. However, the liquidity is going to be an issue there. So yeah, just keep that in mind. So, conclusion of this, video, the reason I like SPY is because it gives me more opportunities to sell against my position. If it's 5 days a week, I literally could write covered calls every single day of the week, lowering my cost basis over time, and potentially getting in and out of my position more frequently. Whether that's a good thing or bad thing, understand your risk with covered calls. Versus VOO, if you just wanted to be a buy and hold dollar cost average into the S&P 500, you could easily make an argument for VOO versus SPY. Just quickly looking at that expense ratio, SPY is 3 times more expensive. So especially when your portfolio really starts to grow into the millions and hundreds of thousands of dollars, the argument can just be even more significant. And not to mention the compounding effect over time of 1/3% or whatever the difference is there can be quite significant. So I don't want to discredit that. However, my plan is to pretty much accumulate both. Because the problem with selling covered calls is that you could lose your positions pretty quickly if SPY shoots up, versus just buying and holding. You're not going to cap your upside as much. So yeah, just some things to consider there. My plan going forward is to definitely continually buy in SPY, and also to either buy VOO or FXAIX. That's the mutual fund equivalent for Fidelity. One of those two options could be great. So yeah, that's going to be my strategy as well. Continue to dollar cost average into long-term holds, and then also continue to dollar cost average into these leverageable vehicles such as SPY or some of these more liquid ETFs that you can trade weekly and even daily options on. So yeah, just those are my 2 cents there. Let me know what you guys think down below. Are you a SPY investor or a VOO investor? Let me know what you guys think down below. Appreciate it.